Hello everyone, Wandering Trader, your quick take, low budget trading nomad. So we are back again with a very interesting week, quite volatile week. I am still in Rio de Janeiro. I am still taking in the sights. It's the weather here is beautiful. I'm making friends. I'm going out, going around downtown. Always buddy up over here. So went to the Christ Redeemer. Um, Anyways, let's get back to the portfolio. So interesting week, very big sell-off Monday, Tuesday, quite recovery from the top of my head, a small recovery on Wednesday morning before Fed Jay Powell announcement, and then we started going down some more. So what are our positions right now? We still have BABA 1,000 shares, we still have Wish 17,500, and now we are starting a QYLD. Exciting, right? So we'll get back to that and my reasoning behind that. So the trades for the week, as you all know, let's take a look. I have my spreadsheet up. So we had 3 trades this week. Our BABA ended up expiring worthless. So our cover call, we had a strike of 147. We pocketed 650, right? So that ended up going worthless. We had a put for BABA as well. Right, we had a put for BABA as well, and we had the strike at 95, and we covered that 8 contracts. So I ended up getting out there early because I saw an opportunity. I saw an opportunity with Robinhood after earnings. So if you are unaware, let's show you Robinhood real quick. Let's pull that up. Hood. Charts. So after their earnings, they actually tanked about like 12% after hours. So over here, I knew I had to jump in. So I ended up going in and buying to close my BABA position, and I went in with the Robinhood. So let's go back to our spreadsheet. Let's pull this up. So I bought this back at 4 cents on the morning of Friday, and I ended up writing for Robinhood. Excuse me. Let's pull this up. 128.2. Buy to close. So Hood 128.2. Let me pull this up. 225. 24. 2422 put. So strike was, let's see, 6, and I've gotten points. Let's see, what was that? 0.03, I believe. Yeah, 0.03. So 120. So we can keep this open. So as you all know, I'm collecting those peanuts. I'm quite far away. I can't actually go too close. My pop or probability of profit have to actually be pretty far out. So because I'm using portfolio margin at this point. So if you guys are not aware of that, I am 6 strike. So let's see. I entered my calculation, delta, gamma, theta. So my probability of it being in the money is almost 98%, 98.92. So I need at least 3 standard deviation, or at least two standard minimum, right? So I know I'm collecting peanuts. Of course, there will be events where I will have to buy and close and take a loss, as you all see. But in the meantime, I don't mind collecting taking the risk to collect an extra 100 to 300 every week. So other than that, I am also going to be writing a cover call for BABA. My Wish, not right now, it's not doing too well. But I'm committed in my monthly cover calls. So let's take a look at our cost average right now. As you all know, BABA is one of my biggest positions. This is almost 70% of my portfolio. Wish is the remaining 25%, and I have like about 5% in QYLD and cash. So BABA earnings is next week, right? And we have to make it happen. I don't want to write monthly, but I am going to actually see what's going to happen and assess from there. Usually when I trade, and I take assignment, I trade for 1 quarter, and then I gauge where it's at, and I find out from the next earnings how am I going to play it, if I'm going to get out, am I going to play long term. But most likely I'm going to see what the number's going to look like. Our BABA is 149. We took assignment. Our cost basis is 145 and 35 right now, and I pulled it up. Right now, this new Robinhood function, it has an option watch list, which you could save, so that's very cool. So I'm gonna write a weekly. It's not gonna be much. It's gonna be 10 contracts, so $90, $60, or $80. But I don't want to lose my shares because it's gonna be very volatile. Let's take a look at our Wish. Right, we have 589 is our average right now. Cost basis is 520. It's not doing so well. We did not factor in, when we were playing this in November, of the upcoming economic turmoil. So we started only playing this about 4 months ago. We've already identified non-profitableness, and we assessed if I was going to be able to hold it for 10 years and what my conviction was and overall. So we had a price target around 5. At that time we were seeing strong support around 650, 7, because they were cash heavy, but evidently macros and other factors, and sentiments drove it down quite significantly, because it's also not profitable. It's a growth company. So we are awaiting CEO. We're doing 30-day monthlies, and we are trying to get the 1 year long-term cap gains when we get rid of it. So for 2023, that's when it's going to start breaking even. So what I am assessing is basically if I'm able to get $9 in 2022, I'm going to get out. So I want to have an exit plan. I don't want to just goof around and not, assess. If I get 14 by 2023, I'm going to get out. So I want to start utilizing my money more efficiently. It's been a very interesting journey. My journey has only been about 3-4 years. So as you saw, 2018, this is when I actually got in and started playing around. And unfortunately, I've gone nowhere for about a year and a half. So this is basically 2018 economic downturn. That's when interest rate was going up and everything, and the trade war between China that Trump and Xi Jinping was into, raising of interest rate. So this is when I started making most of my progress, where I started getting serious, and I've learned, and this is me learning again the hard way, not managing risk as effectively, and also not comprehending the severity of my trades, not really putting much depth into the macro factors as well. So now I'm expanding my time horizons, and I'm understanding, and this is where we transition to QYLD. I have 260 shares. This is about 3-4%, but we are going to start bringing in and putting in money in this ETF every week. I have a pending $40 dividend coming up, and right now the return I'm averaged in at 2104. So I started building this position out on Monday, and then while it started going down, I started dollar cost DCA. So I'm going to try to build this up, and most of my premiums that I collect, I'm also putting it in this. So I have already liquidated my British American Tobacco, and I'm still holding Invesco, so I got a dividend from that, $26.37. I got out of my British American Tobacco. It was very profitable. I made some money on that, and I switched it and I moved it over into my Robinhood and into QYLD. So this is where I see it happening. I'm going to try to build this up to at least maybe 50%, right? And I'm going to try to have 50% of my portfolio on dividends right now. And that's that. This is it. Some interesting news. Most of the high growth have already sold off. If you want to start getting into building positions, SoFi, this is a favorite of mine. Robinhood, I liked it. It's really sad. I've never expected downturns like this. So this is not, I'm actually really comprehending and it's really sinking in on how, and this is not even, we're not even in a bear market. So this is just basic FUD of interest rate hikes and also interest rate hike coming and inflation. And you're seeing like 60% sell off from 70% sell off on non-profitable company. FinTech, even Square, PayPal, they're taking a hit. Social media, Snap, Twitter, Pinterest. I mean, these companies, they were trading like, this is like 50, 60% off, right? Zillow, this is, so it's quite interesting how most of the companies that are still surviving, that are on top, are like Microsoft, Apple, Facebook sold off some a bit. I think they peaked around like 380, 390. Apple was like around, so they taken some hit as well. And Chewy, I remember trading Chewy around 60. I made maybe around $5,000-6,000 trading this in 2021 when it gapped up to like $70, right? Wayfair, this e-commerce for furniture, this was around 280. I was trading this around, writing covered puts around 220. So now I'm just like, I'm just lucky. You know, I didn't get steamrolled last year or the year before, but I got rolled come November, and I got rolled early ahead of everyone else. So with BABA and Wish, I got rolled early, and it's still happening. Nio, Tesla, this is some of the EV. Etsy, 147. This, I made a bunch of money trading this around 165, 170 when it went to 180. Right? E-commerce has not been doing so well in 2021 and year to date 2022. But that aside, you know, hindsight is 2020. We have to move forward. There's nothing else we could do. Our Wish prediction, Wish, not much update, not much news on this front. Although there are some rumors on the Reddit forums about price target being 8. I have no idea if this is confirmed or denied. This is just spreading around in the internet sphere. So there's not much. We're just waiting for the announcement, and we have to wait for earnings. BABA, not much news. Same old. The China story is not actually prevalent anymore. They were heavy in December, November, December, January, parts of January. So now, like, I haven't been hearing much. I don't know why this happened, but they were downgraded. Their price target was lowered a week before earnings. This is very unusual. Usually they get the report and then they will make the price target, but I guess you can also release your own opinion and price target a week before. 180, 150, 200, 180, yada yada. Everyone knows the story with the fundamentals. Everyone knows. Consensus 214. Okay. And this is how we are moving into put call ratio. This is Wish option chain. Look at the ratio. So still it's skewed towards the call side. Skewed more towards the call side come earnings, apparently. So this is when earnings is going to be around. And total interest still skewed towards the call side. So let's take a look at BABA really quick. And let's see their put call ratio. Okay. So come March, there are some, it's skewed, just the volume, let's see, is a little bit towards the put side, but the overall, let's say total interest. So let's say about 0.72, 0.68 is the overall. We're gonna, like I said, we're gonna assess. This is earnings. Earnings has been, these are everyone's bets for earnings. I'm gonna play weekly, and then from there I'm gonna reassess and decide where I'm gonna go from there. So it has been a very interesting journey. We are down, but we are learning and we are adjusting. We are gonna build up our QYLD. We still are gonna collect our premiums on our BABA and our Wish, and we're gonna use some margin and 2-3 deviations out to collect some additional premium. So in the end, my monthly should be around maybe $2,000 a month. $2,000 a month. We are gonna build up we're gonna put in like probably 500 and plus the dividends. So we'll put in like a quarter of our premium profits, and we're gonna put it in here, and we're gonna build up the QYLD. So thanks again. This video has actually been longer, but I think it was necessary to share my thoughts, and I want to wish everyone good luck. Any BABA holders, let's see what happens next week. Any wish holders, stay strong. And I want to also give thanks to the QYLD gang for putting me on this. I've been lurking on them, and I've been building up my comprehension on this ETF. So thank you on that. And I'll see you guys next week. Take care.